Hey traders, this is Christian from Tribeca Trade Group with your weekend summary and video on what to watch for next week, as well as the technicals in the market. So first things first, quick look at last week. The SPY, SPX, not moving once again. This is the fifth week in a row that we have not seen a plus or minus 1% move for a given week in the last 5 weeks. So really, not much to trade if you're a futures trader and just concentrating on the SPX. However, a lot of other moves, and I think if you're just trading SPX, you're doing yourself a disservice in this market. There are a lot of other things that are moving here. Take a look at small caps down 2.5% for the market. Also, if you're only a long trader, you're really kind of doing yourself a disservice by not taking advantage of the downward moves as well as the upward moves in the marketplace. As we've got a lot of volatility, I think, ahead of us going into the election. We saw that on Friday. We saw all election trades start to move as a group. For those who weren't familiar with the election trades, you saw everything moving back and forth as there was some headlines about the FBI and the Democratic candidate. So those quick moves, in case you missed these on Friday, all you have to do is look at Mexico. You could look at the EWW ETF, or you could look at the peso. The EWW has the peso exposure, so you could see this big move down on Friday that took place very quickly. Big move there. You could also see the big move down in the market. So if there was any doubt about whether or not between the Republican candidate and the Democratic candidate, as the Republican candidate kind of jumped a little bit in terms of positives in terms of the polls moving up a little bit, you could see that the market moved down. And on the flip side, one area that's been under pressure, you could look at biotech stocks. They moved exactly the inverse to what the market was doing. Right around 1 o'clock, a big bid in the marketplace. So a group that's been under pressure going into the election has been biotech. Look at it get a bid, as FBI said that I don't think reopening is the right word, but they're investigating more of the Democratic candidates' emails. So all those election trades happened very quickly and exposed themselves on Friday. Again, Mexico peso, the couple other moves, the VIX moved up huge. This was the move up in the VIX on Friday. This was right when those headlines surfaced about the FBI re-examining emails. You could see what happened here. We went from 1460 in the VIX up to 17 in less than an hour. So that kind of sums it up. And I think that's what we can expect right now. There's 7 more business days until the election. For me, and what I'm kind of advocating in my portfolio, is just to sit tight right now and have a higher than normal cash balance and kind of wait. And there's going to be more opportunities, I think, that are going to surface once we get through that election time frame. So I want to just quickly talk about the S&P chart. As I mentioned, we haven't really, in the last 5 weeks, we haven't had a weekly move of plus or minus 1%. So really sideways move here. If you look at the daily chart, I've got this trend line. There's a reason why I have these trend lines drawn. This is the uptrend. We're now below the downtrend just a little bit. We could quickly get back into it, but for now it is what it is. We're moving sideways and we're below an uptrend, and I think you have to be cognizant of that. So we haven't fully broken down. This is the November value area for the month, and it looks like we're either going to open slightly in it or we might be heading below it. So we've got one more day of the month. We'll see how that turns out. Also, one thing to notice here is that for the last several months, we've had an upward moving value area from month to month. Notice that it's actually been moving sideways now, and actually not terribly moving downward, but it's no longer moving up. And that's for the last couple months. It's actually got a little bit of a downward bias to it. Looking at the weekly chart is more revealing. This is a level that I've been focused on for the last several weeks. Why the last several weeks? Because we haven't moved. So 2117 remains the top of value. That's really important. This is the yearly value area. If we fall into this, that is a bearish sign. Every time we've done it, we've managed to come right up. You can see these long wicks. We've snapped back really nicely. And it is what it is. I don't really want to short this market or be heavy into the shorts unless we break 2117. So I always look for other areas of the market. It's not all about the S&P. Small caps for me always provide a leading indicator. If we stay on the weekly chart, you can see that we failed to break out here. A lot of consolidation here on the top of value. We tried to break out a couple times and failed, what we've got is a failure to break out here in small caps, and you could see this pretty intently on the weekly chart. If we drill into the daily chart, you could see we've got a breakdown going on here in small caps, and you could see this in terms of the moving averages as well. You can see that we're below the 100-day moving average, and we've got a bit of a ways to get to the 200-day moving average. So I think in the next week or two, with the move up in volatility with the election, also a lot of earnings reports coming out. We also have this week a Fed meeting. I think there's no real reason to jump in with 2 feet right now to be long this market as we continue to see more and more things break down. So the 200-day moving average is a ways away here. It's right around 114. That's about $4 down, or 4 handles down in the small cap ETF. And I would really pay attention to what IWM is doing. I want to see, for me to kind of get back involved on the long side in the market, I really want to see the small caps lead larger caps. That is more of a risk on tone to the marketplace, and that's not what we're seeing right now. A further look into what's going on inside the S&P 500, what's going on inside the sectors. This is something that I've been analyzing for the last couple of weeks, and you can see, let me just zoom out a little bit here, and you can see that we went from last week and a couple of weeks back even further, strong moves in the market where we've had a lot of sectors above the 50-day moving average. They're dwindling down here. So going from last week to this week, there's only 2 sectors, just technology and financials, that are above the 50-day moving average. So you can kind of hide out in these 2 groups, and you can be long these 2 groups because they're the strongest. But if you look at the rest of the areas of the market, and thankfully these are 2 of the bigger weights in the S&P, which is also why we're not seeing a full breakdown in the S&P, even though you now see 5 different sectors or 5 different groups of equities that are below the 200-day moving average, which is weak. However, they're pretty small. Besides consumer discretionary and healthcare, you've got staples, which are only 10% weight in the S&P. You've got REITs and utilities, which are pretty small weights in the S&P. But nevertheless, take it for what it is. There's a lot more groups that are breaking down that are moving up. Also, you have a lot of sectors that are kind of caught in the middle. Industrials, materials, telecom also caught in the middle. What did fund flows show for the week? Despite what they are saying in terms of, when I say the financial media is talking about a lot of outflows in equities, that's mutual funds. They've been showing outflows almost every week of the year, regardless of the market condition. That to me does not give me anything really other than telling me that that's a dying product. Mutual funds, there's continues to be outflows, especially in actively managed mutual funds. We're not seeing that in ETFs. That's why I look at ETFs. ETFs are a growing product. So I want to analyze something that is growing and that is getting bigger in size. And and I want to analyze what's going on inside those types of inflows. So we saw $7.4 billion of inflows last week. A lot of that was in the Qs and the SPX related funds, your SPY, your IVV, your VOO, which is the Vanguard SPX products. But what I thought was particularly interesting was international markets are seeing a lot of inflows. International developed markets, that's your Europe, that's your Japan, saw $1.5 billion in those particular types of ETFs. So names like VEA saw $1.1 billion. That is, again, international developed markets. $1.1 billion going into that ETFs. And the song remains the same in emerging markets. They saw, I believe it's the 17th straight week of inflows. Despite the strength in the US dollar, they're still seeing inflows. So $535 million were added to that group. Also seeing inflows were technology, financials, and a little bit in industrials. Gold also saw the second big week of outflows. The GLD ETF saw $450 million of outflows in the gold ETF. So I want to concentrate on a couple charts for the week. DXJ, again, focusing outside of the U.S. borders here and outside of the U.S. election. DXJ making a nice little move here. DXJ is Japan without the yen exposure, so no FX exposure. So you're just purely looking at Japan equities, and you look at this chart, kind of take it for what it's worth. It's the price action is now above the 50-day, 100-day, and 200-day moving average. That's positive. That's bullish. You're also saying the 50-day moving average move above the 200-day, which is a golden cross, and the 100-day moving average. That's positive. So I remain long. I am long the DXJ January 46 calls. My purchase price was 87. I've hit a couple targets in this, but I'm going to remain long DXJ as I think the chart is positive. Another interesting one, an area that I don't talk about too much, but look at the volume in EPOL. That's the Poland ETF. You could see that the volume really spiked up here last week. We saw a couple big blocks going up, a million share block, 650,000 blocks. That's pretty unusual, and it looks like somebody is going long this group. This is evidenced by seeing inflows into the group. $26 million went into this ETF last week, which kind of covers that those block trades. So I like this group. Unfortunately, there's no ETFs in EPOL or PLND. That's the Poland ETFs. But I think this is something that that's something that I'm positioning long. And you can see that there's a version point of control, which can act as a target for me right around 1950. So that's my first long target. I'll look in that ETF. And then finally, financials. I talked about how financials and technology are above the 50-day moving average. Technology has not really moved in the last 2 months. So you could look at this in terms of the XLK ETF. And while a lot of people have been saying, I love technology and technology is very strong, it is what it is. It hasn't moved in the last 2 months, maybe up 1 or 2%. And really moving sideways. So it did make a nice move back in July, August. Great. I was long this group. However, the last 2 months, nothing. So it is what it is. It's still very strong. It's one of the strongest groups of the market, but I don't see a lot of momentum here right now. What I do like is financials, that particularly because of what's been going on in the move in interest rates. Let me just go back to the newsletter. You could see that on the weekly chart. This has a little bit of momentum to it. I'm looking for a buy signal, which I haven't seen the buy signal materialize on the weekly chart yet in terms of the Raptor indicating crossing over, but it looks like that's pretty close to happening. I'm also looking for a move to the top of value. That's 2041. Notice that we are now above this downtrend from earlier in the year. That's positive. So what I'm looking for is a move to 2041. Also, the composure of XLF is much different than it was a year ago. If you remember, there was a rebalance that took place. They stripped REITs out of this particular ETF. So you don't have crosswinds. REITs act very differently than banks and insurance companies, which banks and insurance companies are now the big weights in XLF. So with REITs out of that area or out of the XLF ETF, I think the price action of the XLF ETF will be much different going forward. Again, you always want to look under the hood and see what the components or see what the companies are in an ETF, not just by the name of the ETF. And I think XLF is a good example of how that is composed now versus how it was a month ago. And then finally, this is good for financials. Look at the move in rates that we're seeing. We're now at 1.85 in the US 10-year. We were just at 1.55. That's 30 basis points difference in a month. So a big move in interest rates. It also kind of just goes into what I want to talk about next. You could see this move. Let me bring this up in this particular chart because we got the moving averages in Bloomberg. A move below the 200-day moving average in bonds. This is negative here, and this is not bullish. This is bearish when price action gets below the 200-day moving average. I do not want to be long bonds other than for a day trade here, and or maybe a snapback rally. But this is bearish, and you look at those bond proxies. You look at your utilities under the 200-day moving average. You look at REITs, which was a huge winner in the Tribeca Trade Group room last week. We were short. I was short the REITs and made a huge amount of money on a short trade in the REIT ETF. So all these bond proxies are moving with bonds. These areas that have been overbought for the last couple of years, now with rates moving up, are seeing a lot of money. And if you watch my previous videos, I've talked about a massive amount of money exiting the REIT ETF group over the last couple of weeks. That's tapered off a little bit, but the damage is done. And you could see from all the way the VNQ ETF was 92, it's all the way down at $80. So another reason why I watch fund flows is the money coming out of REITs was a great signal to get short this particular group. All right, so that is those are the main themes. We do have stocks to watch for the week. That you have to be a subscriber of the Tribeca Trade Group to see which individual stocks that we're watching. And you go to our website, tribecatradegroup.com. If you like our analysis, we get much more into it during the day in the trading room. So you go to tribecatradegroup.com, go to our product section, and check out our trading room for a month. You could actually get half off the first month. The coupon code is TTG. LD, that's Larry David, to get half off the first month. Check us out. I think you're really going to like it. We do this analysis from a top-down approach to the market to find out what individual names that we want to be in the marketplace. So that's the end of the video. Again, the major theme for me is pretty much exactly what I said last week. I don't want to be long this market right now into the election. I think we're going to continue to see volatility, and a lot of the charts are breaking down. So I'm still kind of holding out for a year-end rally, but I'm patiently waiting for the right area to get into. And again, we're going to see this. We're going to see, if you follow option activity, you're going to see those buyers get back into the market. And certainly last week's option activity did not signal that at all. So thank you for watching today's video, and enjoy the rest of your weekend. Thank you.